soaring close to that 65,700 mark, while the Nifty too up nearly 50 points, closing in on that 19,500 mark, all in the green. It's a green Friday morning for Dalal Street. We have Suyash with us now. Suyash, talk to us about the markets. What's really driving the rally this morning?
So Indian markets had a positive opening today, as you mentioned. It tracked gains in most Asian markets as well as US markets and European markets. Now currently the Sensex is up about 0.28% at 65,740 levels, while Nifty is up about 0.24% at 19,459 levels.
So
now,
it has been a bit of a tepid week for the markets compared to what it was in the last week, and looks like it's rounding off this sort of up and down week on an extremely positive note, Suyash, isn't it?
Yes, after a 4% run-up last week, the gains have moderated on the Indian markets, but the good thing is that we have not seen a session of a great profit booking. The returns have largely been range bound, and the action that we are seeing on the D Street is largely stock specific, as we know, because the earnings season is on.
Of course, it is stock specific. Earnings season is on. We will be talking about that. But talk to us. Any clear gainers this morning? Any clear losers?
So all major indices on NSE are trading in the green. Nifty IT, Nifty Realty and Nifty PSU Bank have risen about 1%. Now among stocks, Infosys, Hindalco Industries, Wipro, Tech Mahindra were among the top gainers, while losers included Mahindra & Mahindra, IndusInd Bank, Bharti Airtel and Power Grid Corporation.
All right, so that's some of the gainers or the interesting gainers. I want to begin with that IT pack that you're talking about. There were worries that the Indian IT sector's earnings were not going to be up to the mark, Karthik, isn't it? But somehow the IT pack is trading, in the green in the markets, and that's despite a huge, big, IT giant of India, Wipro, not. Missing street estimates, missing analyst estimates with its quarterly earnings, Karthik.
And sequential growth even in HCL Tech had slowed down. Sequential growth in Wipro, I don't know how robust it has been, but
it's down close to,
it's down about
6.5%.
6% or so, 6.5%.
Yeah.
So, I don't know. I think overall, because the IT sector draws its cues from what is happening in the US and Europe, that could be one of the reasons, I believe, that investors don't want to sell their stocks in IT sector yet. I think they want to hold on to their stocks, if at all buy some, because inflation in the US has come down to about 3%, down 1/3 of what it was 1 year ago. So it's down to 3%. Overall, the outlook for US markets is looking good. That should entail discretionary spending in technology to restart. If that restarts, we should see more business coming by way of banking, by way of telecom, and these clients based in the US and Europe back to Indian IT players like HCL, like TCS, Wipro and Infosys.
Right, and it was those orders from North America and Europe which were set to slow down, and that was set to impact the earnings, and they clearly have. But the stocks, somehow are going in the other direction still. Suyash, if you can explain this for us, talk to us, and also, let's also talk to us about the Wipro results that came out sequentially, which means that as compared to the last quarter, which is the last quarter of the previous financial year, the first quarter of the current financial year, profits were down 6.6%, if I'm not mistaken. Whereas on a year-on-year basis, they were up, but they did miss. They were below street estimates.
So, Krishna, one of the things that we need to understand is that Nifty IT or the IT pack had been underperforming the markets for nearly the last 6 months or so. Nifty IT has given a returns of about 1% or so in 2023, whereas Nifty has surged about 7%. So there was moderation in returns when it came to the IT pack. So and even right now, where the discretionary spending from Europe and US has slowed down, the order book has remained largely robust.
Right.
TCS has an order book of $10.2 billion. Wipro announced that its order book went up to $3.7 billion. HCL, despite having not as strong as an order book as Wipro and TCS, expects discretionary spending to pick up in the subsequent quarters. So the outlook coming out from the company's management is very optimistic, and that's what I think the market is looking at.
All right, so which basically means if you're invested in blue chip IT stocks, Fantastic. Continue sticking with it.
Stay there. Don't look elsewhere. It's a good sector to be in. And this sector going big on generative AI.
Right.
So AI seems to be, I think, one more very, very key trend that we are picking up with the results, with the announcements coming, not just with Elon Musk launching his XAI, but even Indian companies. For example, Wipro announced yesterday, ahead of its results, in fact, day before yesterday, that it is coming out with its own AI 360 tool, which is going to be a generative AI tool. And this is going to involve apparently participation of some 30,000 odd people. These are experts in analytics, these are experts in machine learning, artificial intelligence, all being pulled together to generate this Wipro AI 360. And after the results came out with TCS announcing its results day before yesterday, in fact, the TCS management has gone on record to say that it is also going to empower its own workforce of 100,000 people minimum to embrace AI. And AI solutions to be offered to clients. So this whole augmentation of artificial intelligence is a new trend which is coming through and coming to light in this result season, even though street estimates are being missed and even though the sequential growth has been declining. I think AI investment in AI is something that all IT players seem to be very squarely focused on right now. And this, I mean, I feel India could have led that pack. If you remember when Vishal Sikka was the CEO of Infosys ahead of his acrimonious exit from the company. AI is something that he wanted to go after in a big way, but was not permitted to with the fallout that happened with the larger Infosys board and the original founders and shareholders. So Vishal Sikka had to exit, but otherwise I think Infosys could have had that edge over the rest of the Indian IT sector, definitely, if not the rest of the world, when it came to AI and generative AI. So, but the trend is pretty clear that yes, Indian companies are taking AI seriously, which means there is serious potential for a B2B deployment of AI, which has been in the works for a while, but even generative AI, which can be used like for, you know, with people like you and me doing our daily chores of writing, creating images, creating ad content, etc. So it seems to be a very, very potent tool which all IT players are taking very seriously right now.
Right. I did want to speak to you about all that news coming out of the TCS earnings, post TCS earnings, about them offering a platform for generative AI to their customers, and also getting ready. They were talking about around 100 projects in the pipeline. Real projects that are in the pipeline, of which there are 50 pilots. Generative AI pilot projects in the works, and also as you're talking about, they want to create around 100,000 strong generative AI associates workforce in TCS. So it's a 360-degree thing that they're doing with generative AI. I love the word that the CEO of TCS, Krithivasan, used, the flavor of Q1.
Flavor of Q1.
Flavor of the quarter of the first quarter of the current financial year was the term that he used for generative AI per se, and that's big coming from a company like TCS. I mean, it's all fun and games playing with ChatGPT and talking about it, and Elon Musk and etc. But this is right here, and this I'm guessing this announcement is even being made because they're expecting that to also drive business. Absolutely. Wherever there is a problem in terms of business coming down, there's going to be generative AI helping TCS get more clients and more business.
Absolutely, and imagine the potential of other new business verticals that open up with AI. There is an existing client base that can be given AI-driven solutions. There is an existing order book that can be made more efficient by deployment of AI. But imagine the new verticals that open up. Advertising could be one. And you were at the Goa Fest, Krishna, along with Amit, who will be joining us shortly. But you were at the Goa Fest and you've seen that companies like Accenture are already going big into advertising.
Right.
And they don't want to be just consultants anymore, and they don't just want to advise clients on which agency to go for. But go ahead and build those creatives.
They don't want to be just the techies in the room.
Yeah, they don't
want to be just the techies in the room. They want to be the creative
guys. They don't really need to hire too many creative guys, because the spade work can be done by generative AI. So what stops a Wipro or a TCS or even an Infosys or HCL Tech to deploy AI in these new business verticals and then engage with clients at a much deeper, more holistic, a complete 360-degree solution where you're not just providing efficiency on the shop floor, you're not just providing SaaS-based products which can, which don't require too much coding, but also give them creative solutions.
Right, and we're also tracking how the deployment of these things. TCS is essentially doing this because this is for the mid-sized companies and the small companies who want to deploy generative AI as part of their daily work, as part of their daily operations, and that is another story. One is the big tech of India getting a huge amounts of business from India and overseas because of their own generative AI capabilities. And the other is that all of this software that gets made, all of the stuff that gets done gets deployed. That means that, the entire mid-size, the MSME, the backbone of India's economy, 30% of India's GDP comes from the mid and small and micro enterprises of the country, which means that they will also get simultaneously transformed because of generative AI.
Absolutely, Krishna. And again, these are going to be low-cost solutions.
Yes.
It is going to cost you a lot less to have an AI engine do the rudimentary work for you, if not the advanced sort of, more high-skilled technical kind of work. The rudimentary work will be done by an AI engine, by a chatbot or an AI bot at a fraction of the cost of what it would, entail forming a team to do the same work. So I think for the MSME sector, definitely generative AI or AI-driven solutions will serve as a great cost arbitrage when it comes to getting the same work done by human beings, by professionals, and at the same time talk about, let's say the time to market. Talk about the efficiencies and the decline in error rates of doing the same work. Thanks, Yash. It's all going to augment this whole growth story of efficiency, productivity, better time to market, cheaper cost, greater economies of scale when you deploy something like AI. So I think this is definitely not just going to be flavor of the quarter. I think this is going to be what Nirula has had, the 21 love. It stayed, the flavor of the month forever almost. So I think AI is going to be the 21 love for the IT sector, and it's likely to stay here for as long as something else comes to shackle this whole AI revolution that we are seeing right now.
I'll go one step further. It's the flavor of the future.
Flavor of the
it's
future.
The flavor of the future. I just want to take things back since we're in the IT space still.
Yeah.
I really wanted to get down to the basics of another important matter that we were discussing, and that is the results of Wipro. Wipro results coming in. How do you see this, Suyash? And for the stock per se, if I were somebody who had Wipro as part of my portfolio, or for that matter, part of my mutual fund portfolio, betting hugely on Wipro-based funds, how would I look at the situation going forward? Because the stock is doing well this morning, but the results technically missed analysts' estimates.
So, Krishna, Wipro was expected to, declare not the best quarter. It was not going to be the best quarter for Wipro. Right. It was expected from the street. Now their exposure to the BFSI sector as well as high exposure to consulting has been one of the reasons why it reported a muted set of numbers. But then again, we look at the order book. It remains above 3.7 billion. The new orders worth more than 1 billion. They won contract about 10 new contracts which were worth more than 1 billion. So it looks like, the future, at least the prospects of Wipro going forward, along with the fact that the results were not as muted as the street expected.
Okay.
That's driving the stock higher.
All right. Okay. It's fascinating. It's the kind of thing that we notice in football as well. When a team wins a season, it's not just about the 3-0, 4-0 that they do. It's about the 1-0s that they eke out, or the 1-1 draws that they eke out. It's grace, it's courage under pressure. In a quarter where you're supposed to be muted, if you can be less muted, that's what that's where the difference is. And here's wishing all the luck to all those invested in Wipro as we speak. But sticking with the tech sector, but I just want to move on to a big piece of news that came in yesterday evening. I just thought we should discuss it right away. That's on Byju's.
Ouch.
Right. Huge piece of news on Byju's. That board advisory committee that was meant to be formed. Some big names on that board advisory committee.
Rajnish, Kumar, Mohandas, no less. Yeah, we are talking about big names this morning.
Big names from Byju's. But talk to us, about these appointments, Karthik. What were the thoughts that came into your mind as you were going through that piece of news?
So, Krishna, this has been in the works for a while, and if you remember earlier on our shows also we've spoken about this, that Byju Ravindran has been, trying to portray an image that he wants to do a very, very solid course correction. I think somewhere deep down he knows for a fact that yes, we have goofed up, we have messed up, and we haven't really lived up to the expectations of our customers, expectations of our investors, and overall expectations of the brand Byju's. So I think we have now arrived at a point where Byju Ravindran has very, very categorically arrived at this decision that some course correction is due, and that course correction by way of inducting more board members on the seats of Byju's has now come by way of existing investor Mohandas taking a seat on the board, and in addition to that Rajnish Kumar, former chairman of SBI, India's largest lender. So I think it adds that gravitas to the board of Byju's, and Byju's had seen the exit of board seats from the likes of Sequoia Capital and Chang Investments, and in general, a lot of rancor around the board members exiting, quitting. Now I think the Ravindran family has decided that it is not going to be just family members occupying those board seats. So it is definitely course correction to begin with. Having marquee names like Mohandas and Rajnish Kumar pretty much send out a very clear signal that we take our corporate governance seriously, we take our business seriously, we take our recovery seriously, and we are in the business for the long haul. We are not fly-by-night operators. We are not going to shut down business, pack up, declare defeat, and just walk out of that door. We are here for the long run. We are here for good, and we want to make this course correction. And that is the message which is loud and clear with the appointment of existing investor, which is Mohandas himself, who has stayed invested in Byju's, and Rajnish Kumar himself.
That's the more fascinating part, if you ask me, Karthik. Somebody who's invested, and has seen what Byju's has been through. Amit, Mohandas I'm sure has been watching all the headlines from Byju's, the wrong kinds of headlines, coming up from Byju's, and now he's in the board advisory committee along with another veteran from the banking industry like Rajnish. Talk to us. What is the way forward for Byju's from here on?
Rajnish Kumar, at least I can say, has had a history of basically correcting corporate governance issues in companies. He did that with BharatPe before this. So in this matter, he's a veteran. Mohandas everybody knows about him. He was at Infosys. I'm just repeating the information, and it is only good news even for brand Byju. As Karthik said, they have made it clear to the market that they mean business when it comes to course correction, and they are hiring names with repute, who have repute even in correcting these kinds of matters on board.
Right, Karthik, and now that this board advisory committee is getting formed as quickly as they promised to. Technically, it was supposed to be done in a month's time, and then
it's done in a week's time.
It's done in a week's time. So things are moving at a hectic pace. And from now on, all I can think of right now is that Byju's has to file those audited financial statements. So at the earliest.
Yeah, so I think the dates have been released by them. They're saying definitely by 30th September, the financial reporting for financial year FY22 would be through by 30th of September.
Right.
And by 31st of December, the financials for FY23 last year would also be submitted for audit. So yes, I think the challenge that really Byju's faced itself with, some by default, some perhaps by design, was the fact that it was a company that was running at breakneck speed. It was a company that thought that, hey, I am among the most valuable companies in the country. I have the backing of investors. I have investors with very deep pockets. Nothing can go wrong. Let me just do this marathon as a sprint. And let me just try and do everything I can, which I may not have even laid a proper strategic roadmap for. Let me try and cover those milestones as quickly as possible. And I think that is what happened with the acquisition of White Hat Junior. That is what happened with the acquisition of Akash. So it stayed not just focused on its core online education business, but also diversified into coding, also diversified into traditional brick and mortar tuition centers, and made these investments and wanted all these investments to start firing, start doing well. Akash continued to do well. In fact, is doing better after the acquisition by Byju's. But White Hat Junior has pretty much, collapsed, and there aren't fresh takers. So what really happened was that they wanted to go really fast. They wanted to run really fast in their business and lost sight of the core of what their business is, lost sight of what the brand Byju stands for, lost sight of very, very basic issues around corporate governance, around not servicing, your customers very well, not, not submitting your financials for auditing for the mandated reporting purposes. And in general, it just seemed that in their race to continue growing, they lost sight of the very, very finer details of running a sustainable business.
Right, but Amit, you wouldn't at this stage, with the way things are going at Byju's right now, suspect, it would be difficult to suspect malice at this stage, because they did promise a board advisory committee. They're going on with it. They have clear timelines of how they want to fix what has been wrong so far. So at this stage, I would say all those suspicions of deliberate malice, deliberate malice or willful wrongdoing, as it's called, are difficult to agree to.
I don't think anybody would have any suspicions going forward. And I believe if with the way things there are moving, even the IPO that they had planned for Akash Byju's, they will basically go through with it in the times to come, after the audits are done and everything is in place. So all the suspicions that even we had, I think so those will be laid to rest in the times to come, at least with the way things are going right now.
So we can hope for a resolution in the matter soon. Another thing that we are also hoping for, along with the resolution in the edtech sector, because Karthik, it's not just about Byju's, it's about the entire edtech sector, and Byju's, has a huge say in the matter of India's edtech play per se going forward. So we're all hoping that all that's gone wrong can be fixed at the earliest, and then we can move on and make use of the edtech opportunity, because there's education that needs to be reached to so many remote areas in India, and edtech could just be that could be filling that gap, that missing link.
I think that will have to be the fourth line of business for Byju's. If Byju's really wants to deploy whatever technology and investments it has done in creating these curricula, in creating these course materials and the whole disbursement mechanism, then the price point will have to be looked at. Because at one point, I remember at the start of the pandemic, Krishna, I had the opportunity of speaking to Divya Gokulnath, and we were trying to understand from her what kind of a fillip the COVID pandemic is going to give to EdTech, and at the same time trying to understand from her that is this going to be an opportunity only for the urban elite who have a laptop, who have a broadband connection in their homes, and is the divide, the digital divide when it comes to education, only going to widen when it comes to the difference between the haves and the have-nots. And her sort of assurance to me back then, I'm talking technically April, May 2020, right, 3 years ago, her assurance to me was that no, Byju's is going to stand for bridging that digital divide and stand for making courses cheaper, more affordable, mobile friendly for the not have too much of of the section of the population. But I haven't seen that roll out yet. Okay. I think courses continue to be expensive. Cross-selling of laptops and tablets and additional courses, all the paraphernalia, all in this race to maximize revenue, keep your existing clients with you, diversify their holdings with you, sort of led to this mess that Byju's finds itself in. And now that schools have reopened and the real edtech opportunity for the urban, for the haves, is behind us, I think the time to attack the rural segment of the population, the more interior segment, tier 3, tier 4 cities of the population, that is the opportunity that Byju's needs to play on.
That is the opportunity that Byju's needs to play on. Talking about bridging the digital divide, I'm going to pick up on another subject, another topic, and that is the fact that we have UPI in India, which in itself is almost a miracle, the way that's been adopted by Indians for digital payments. And now you have UPI Lite. So it's fascinating, isn't it? You're talking about making edtech courses, accessible to the remotest areas where the internet connectivity is not all that great. So making sure, obviously, everything has to be lighter, easier to download, or there should be an offline version, etc., etc. You have UPI Lite right now, Amit. Fascinating, isn't it? Talk to us about UPI Lite and what it has to offer all of us.
Okay. It basically makes certain things simpler, at least for smaller transactions. So you can do one-click transactions on UPI Lite without the use of a UPI PIN. That is up to 200 rupees single transactions.
Right.
Then this UPI Lite can be loaded with 2000 rupees twice a day. So that is how much. So basically, it will be faster and it will be simpler, and it will be less clutter basically in the passbooks or what do you say of banks. Right now 15 banks are supporting UPI Lite, more will follow, but yeah, it's basically going to make your at least lower purchases, lesser amount purchases faster.
Right, so it's fascinating. And also, can you tell us about any names of the banks, or the 15 banks that's available with you?
All the leading ones. So all the public sector banks basically are the ones. I don't have the exact complete
list. So mainly
right now,
the leading public sector banks of India are already on board.
And some others too, but more are going to follow.
More are going to follow. But Karthik, it's very important, isn't it, to take UPI and make it UPI Lite? Or that facial expression tells me that you're not all that convinced about it.
I'm a little confused, Krishna.
Okay.
Why? Let's jog our memories back. Okay, everybody remembers demonetization.
Oh,
everybody remembers the full page ad released by Paytm the day after demonetization, thanking Prime Minister Modi with an image of Prime Minister Modi thanking him for digitizing payments in India. Right.
And the memes that followed.
And the memes that followed. Let's not get into the memes yet, otherwise we'll end up becoming one. So the journey, the pickup that we saw in digital wallets was astronomical. Everybody was on Paytm, everybody was on some digital wallet or the other, and you would load cash onto that digital wallet and you would transact with that wallet. And then comes UPI and says, goodbye wallets, digital wallets are history. You don't need to load up cash, you don't need to keep that cash in a wallet interest free, let the money be in your bank, and this is going to be bank to bank transfer, completely secure, accepted everywhere. And you had QR codes of all sizes and all colors mushroom from any panwala to any 5-star hotel. You had QR codes pretty much exploding in the country. And we've seen UPI pick up month on month. Every time the RBI releases data, UPI transactions are swelling higher and higher.
Right.
And now we are saying, hey, hold on. UPI has a wallet feature. In that wallet feature, you add 2,000 rupees twice a day, make payments. Are we going down that curve? Why and why are we doing it? I think the kind of safety security features that UPI has, every time you make a transaction, you scan a QR code, you inch in a PIN code. Why do you want to get rid of it? I understand if UPI Lite is a lighter application to run on feature phones, not smartphones. You have, let's say, the GeoPay equivalent, which can run on small phones, feature phones, not smartphones. It's a lighter application that does not consume too much data. I'm all in favor. But load 2,000 rupees twice a day into a wallet, make transactions of 200 rupees without inching in your code. Who's going to redress the frauds that start taking place? You leave your phone unlocked, somebody goes, swipes 200 rupees, gets some goods and walks away. We're opening ourselves up to more challenges and going down the slope back into wallets. Why? Why?
Hold on. The moment I heard of UPI Lite, my thought was to a particular instance when I had to pay my Uber driver, and the drop was at a particular spot close.
There was no internet.
Where there was no internet.
Happens all the time.
So, and I'm like, I really wished there was a wallet from which I could transfer.
But that wallet would still need internet connection, Krishna. I don't think UPI Lite is going to solve for those dark patches where you can't pay your cab driver, because that transaction also has to go through the internet.
Right.
It's not going to go through Bluetooth or go through any other wireless technology.
Okay. So if that objective is not going to be
I don't
met,
think so. I don't think so.
Even I don't give. I don't care too much about the UPI Lite. But Amit, do you have any arguments in favor of UPI Lite at this stage? Now that Karthik has chosen to deconstruct it completely,
and this confusion stays in my mind even for the central bank digital currencies. You've spoken to experts, so you can tell us about that after Amit gives us his number.
The e-rupee and the fact that now you can use the e-rupee through UPI,
which is again a wallet, right? It's again a wallet. So
yes,
I mean, what good is it really serving anybody? The retail.
I was about to say it's an argument for a different day, but okay, please go ahead.
Never mind.
We're with the normal rupee right now. Point is that the UPI Lite is, we're discussing it for the normal rupee right now. Amit, any arguments in favor at all?
I suspect that maybe they got some market research which showed that they are losing out on certain large chunk of customers who prefer wallets, which other platforms are offering.
But wallets are available already.
So probably UPI also wants him to basically get into that space.
I really see the point over there. That is the reason why world over, if you see, apart from China, of course, people have been skeptical about getting onto the entire, digital transaction from bank to bank. That is, UPI basically does it from your bank to somebody else's bank account.
That's right.
And that means that your UPI account is directly linked to your bank account, opening it up for the vulnerabilities of hackers. Now, that is a fear. I know Indians have gotten over that fear completely and have gone miles ahead of it.
Encrypted.
Yeah.
Your bank account number doesn't.
But there has to be a world where those with the fear can live too. We can't have it like, we've gotten over the fear. Nobody can have the fear. Hey, don't have fear because I'm done with that fear. You know what I'm saying? So, there has to be, I think it has to be fair and equitable world, Karthik. I'm cool with UPI. You're cool with UPI. We're UPIing all the time. And we're so proud of the fact that it's India that is doing UPI. Look at the size of the transaction, billions of transactions per month.
No, I have nothing against UPI Lite. Don't get me wrong. I think great. It's a novel idea. Go make your transactions.
No. But the volatilization, the volatilification, I think there is still a case for the existence of wallets. That's what I'm trying to say over here.
Sure. My whole confusion stems from the fact that are we clear ourselves as consumers, as users, as decision makers, as central banks, right, as custodians of the wealth of the population, are we clear on what trend line we want to follow? That is where my confusion stems from. Because we had seen the rise of wallets and we saw the decline of wallets. And that decline of wallets came on the back of a rising UPI bank-to-bank, real-time, PIN-enabled, secure interface. And now we're going down that slope back towards wallets and saying, hey, let's get wallets also to coexist. Sure, I mean, more options available. Each person would have a different liking, would have a different take on how they want their transactions to go through. I'm all in favor of choice. I'm just confused with the trend line. And that's it. I'm journalistically confused. I'm not confused as, hey, this is not right or this is, this is the way to go. I'm just confused journalistically. Where is our digitization of the currency heading? And that is where the confusion on the e-rupee also stems from.
True.
E-rupee is also technically a wallet, isn't it?
Right.
It is not going to be bank to bank like the UPI. It is going to be wallet to wallet, linked to perhaps a bank account, operating on the same QR codes, interoperable with UPI, perhaps riding on the UPI platform itself. So are we creating too many entry points for hackers or for scammers to come in from? Right. Are we going to eventually lead towards a situation that you don't know where your transaction is going from?
Right.
This happens with me. Some of the apps that I use for digital payments, I don't know if the money has been deducted from my wallet, if the money has been deducted from my bank account. And when I enter, let's say, a toll booth or something, I realize, hey, my wallet has dried out because the payments I thought I was making from the bank actually went from the wallet. And then I'm creating a traffic jam for others behind me. Anyway, that's a personal...
Fair enough, Karthik.
But we are offering too many products without really being able to understand, I feel, where we want our digitization of money to head to eventually.
How about making UPI as secure as possible, and so that that fear is completely stamped out, and we just move on to the next level of being able to make payments through face reading or something like that. True. So let's just get you're just talking about the fact that just move on to the next level.
UPI gets unlocked, and Google Pay in fact has partnered with UPI, so Google Pay gets unlocked with the face, at least on the iPhone. I'm sure that would be a feature on other smartphones as well.
With generative AI thrown in, maybe you can intuitively make payments that are going to happen to you going forward.
That's going to be difficult, Krishna, because the deep fake is going to generate your image and get your UPI to be unlocked and make a payment you don't want to make to the dark web.
Oh gosh, technology musings. But for now, UPI Lite is available, and UPI Lite is here as we're talking about it. So we'll see how. I'm curious to know what the kind of adoption rates would be for the UPI Lite. We'll discuss that eventually with Amit. When we get the numbers on that.
I suspect that these people have basically jumped the gun for somebody else to come in and start saying it is one click. Now, what I can suspect is all the people who use Apple and go to an app store where they even have to purchase music, it is one click. You just click and it comes down, whatever. So probably with ONDC coming on, UPI wallets will basically make that one click on at least ONDC, and probably that's where the direction is, to drive traffic that side. This is my suspicion.
Fascinating. Fascinating. Because and ONDC, talking about ONDC, right now the e-rupee and e-rupee through UPI and e-rupee through wallets is mainly available to traders. For business to business transactions is what e-rupee is largely used for, block transactions in rupees. So there could be Amit is on to something.
Could be, absolutely, but 200 rupees again, it doesn't sort of give me too much
confidence. This is small value transactions. That's what value transactions. Right. Fair enough. We will move on away from UPI to something else that really affects all of us, and that is the heavy prices that we are paying these days for our flight tickets. And looks like India's civil aviation sector has a brand new hero in town, and new kid on the block, Akasa, has now beaten old kid on the block, SpiceJet, with a larger market share with less than a year's existence in the market.
And add to that the announcement that came yesterday, Krishna, Akasa pretty much stating that it is going to place new aircraft order, which are going to be 3-digit orders. So the minimum aircraft order that Akasa is likely to place is going to be 100 new aircraft. That's the minimum. It could be higher than that, but it said that it's going to make a 3-digit new aircraft order. And that I think is big news. But yeah, I think a 7.2% market share pretty much states that it has overtaken not just SpiceJet, but had Go Air been in the market, when Go Air ceased to exist in the Indian skies on the 3rd of May this year, it had a market share of about 6.8%. So Akasa at a 7.2% market share. Now, of course, with Go first out and the pie being distributed, hopefully, not equally, unequally among the remaining players.
Right, Indigo, because Indigo is a plus 60% market share, most dominant player.
63% or something. So yeah, I think Akasa has pretty much reaffirmed its position, its stated vision that we mean serious business, and we are taking this opportunity of the Indian skies being -1 player, and the other player, SpiceJet, also in troubled skies, not troubled waters, in troubled skies, in turbulent skies, despite the fact that yesterday, in fact, you had Ajay Singh announced that he is going to add a 500 crore fresh infusion into the debt-laden airline. But I think it is definitely good news for consumers that there is another serious player. There is Akasa Air, which with this new aircraft order, with an existing 7.2% market share, is going to start servicing new sectors. It's going to start flying new routes, and that should offer some competition to dominant players like Indigo, like the Air India, Vistara, Air Asia combined. And become another option, another choice available, which will drive down prices, which will give more flexibility for you to choose a flight of your liking at a time of your choosing.
Right, the rise of Akasa, Amit, is reminding me of, I'm hoping that India gets its own Ryanair equivalent, in the sense that both to fly within the Indian subcontinent and also take flyers out, and then the entire intention of that airline is to provide more flights, to more options, to more people, and be different from the other airlines, so to speak.
Yeah. They have done this with 19 aircrafts right now. If Go comes in tomorrow, they're coming in with 26. So they need the new fleet of aircrafts to basically consolidate this lead that they have gotten right now.
Right.
So it is, yeah, it's the times to come are basically good for consumers, as I can suspect right now, with hoping Go comes into the market and basically adds to the competition.
Yeah,
I think
absolutely.
we already have our Ryanair in Indigo, for that matter.
Yes.
Oh,
I think
you
Indigo
said
is pretty much servicing a part of the international markets as well. It flies to Dubai, it flies to Bangkok, it flies to Singapore, it flies to, if I'm not mistaken, a couple of other geographies also in the subcontinent at least.
And it gives cost-effective
and
solutions.
it gives zero frills. You don't get your dinner on the flight, so you've got to pack your dinner and take the red eye.
Yes.
But yeah, I mean, you have that option already, and with the new aircraft order already placed by Indigo, of course that will be serviced over time, but it is going to expand its presence not just in India but even outside the shores of India. So if I were to sort of put my money on an airline which is going to be sustainable in the foreseeable future right now, despite the small glories of Akasa or the challenges that SpiceJet or Go First are facing right now, I think Indigo has been consistent, has sustained itself fairly well. It came pretty much as India's love airline, right? If you remember the Dallas-based Southwest airline, if I'm not mistaken, which had the heart logo, the red-colored heart logo, and it was the first no-frills, low-cost airline in the world. It operated on time. Indigo pretty much followed suit on all those parameters. It was no frills. It gave you a good array of menu to choose from if you wanted to spend money in the air and buy something, but it gave you nothing pretty much with your ticket. But it gave you assurance that we're going to fly on time, Indigo standard time. We're going to fly on time, we're going to take you to your destination, land on time, and you will not end up missing your business meetings or your family time or your vacation time because you're stranded on an airport because we weren't able to service you. Right. So I think it came with that very definitive promise, won the trust of Indians, continued being a low-cost airline, did not add a premium to its offerings because it became an on-time airline, Indigo Standard Time as they used to call it. So I think it's pretty much lived up to those expectations, seen enough and more turbulence in the sector, and continues to still lead the Indian skies with a 63% market share. I think that's the airline that I think is going
absolutely
to
not.
be here
What is really heartening is that even as that happens, we're hoping for more than one winner in this game, because look at the size of the market. This is a market where I don't think the most dominant airline should be having 60% plus market share. This is a market big enough for the most dominant airline to have about half of that and have enough and other players and other options for it.
Totally.
So in an ideal case scenario, if you ask me, Karthik, I'm very happy about Indigo continuing to be the most dominant player, but the market really expanding with more and more players.
So this is a subject
Akasa Air.
You're right. So Amit and I love to discuss this. I think every second day we end up discussing duopolies in the Indian market.
Right? Telecom,
aviation, FMCG, everywhere. You see that right now we are at the cusp of
a duopoly at the
multiple sectors commanding duopolies, and aviation is a prime example of that, right? You have the Tata Vistara, AirAsia combine and Indigo put together 85% plus of market share, right? So it is definitely a duopoly. Now I think the race is definitely between Tata Group and Interglobe Aviation that runs Indigo on who is going to expand faster, who is going to take India abroad faster, who is going to service more routes faster, and who's going to carry more passengers every day. So it won't be a monopoly. It will definitely be a duopoly in the foreseeable future. I don't right now see a third player coming in and disrupting this duopoly for at least the foreseeable future.
All right, fair enough. We'll leave it at that. Just quickly, one more thing I want to touch upon is the fact that, you're talking about all the cities in India, coming under floods from Bengaluru to Gurugram, all these startup hubs. And now you have, Indian startup founders finding a way to the US through Canada, because of Canada's startup visa program called SUV. It's called SUV. It's also the name of the game. It's also the name of the cars that Indians want to buy these days. This is the SUV program. Quickly, so Indian entrepreneurs get to go to Canada. They have a 3-year work permit for them and their team, whoever they are hiring. It's a 3-year work permit for them. That's a fantastic visa program. And now you can get your way through to the US to the International Entrepreneur Rule, which they have, IER. So talk to us.
And that gives you another 2.5 years in the US. So you could live.
So it's
in
a 5.5.
if you have, yeah, so I don't know if it is plus or it is within that 3 year. I think it would be within. So primarily, you set up shop in Canada.
Right.
You get one of the 70 Canadian established investors to own some stake in your startup. So primarily, if you're looking for venture capital, the message is that look at Canada, look at the 70 registered VCs in Canada with this SUV program, who would possibly fund part of your business or buy stake in your business. If you do that, or if you're rooted through any of the incubation state, registered incubation programs, you get a direct visa entry with a 3-year work permit into Canada, and that now through IER gives you access to America, the USA, where you could spend 2.5 years of your business life, and that could be extended by another 2.5 years. So it's primarily a great global opportunity which a lot of Indians seem to be taking advantage of right now, that get funding from a Canadian VC, set up shop in Canada. It opens you the international borders of USA, and you enter USA and you expand your business there. I think it's a great story for Indian entrepreneurship, Indian startups who want to look at setting up shop outside of India.
All right, great opportunity over there. And with that, I'm afraid, Karthik, our morning chat up.
Already?
Yeah, it's about time.
10:45.
We've got other things to do for the day as well, Karthik. So, I think it's time we move on and get on with things and wrap this little shebang up. And, we have lots more to discuss in the evening as well.
What do we do in the evening? I think we are on 14th of July. It's Friday, practically about 15 days left for income tax filing to be made for people to file income tax.
Amit, I think we should do a special for all those watching us. If they are watching us, or for those yet to watch us, I think we should tell them that any doubts about tax filings, 15 days to go, anybody railing against this deadline, haven't got things together, we'll tell them what needs to be done. What say?
Especially the confusion between the old tax regime, new tax regime, Section 80C, there, not there.
I think some of our chartered accountant friends, to help.
Cool. Let's move it then. Let's start making some phone calls and carry on.
Yeah.
Thanks, Krishna. Thanks, Amit.
Thank you. See you guys. Bye.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.
Imran Khan may have bitten a bit too much, more than what he can chew.
Implosion.